This conference will
we
now be recorded.
various recent judgments of service tax and its implications in GST, and we have none other than Mr. Srikant Shenoy, who is absolutely apt person to take a session on such a topic. It would be giving me an immense pleasure to introduce Srikant Shenoy. He is a commerce graduate and also a chartered accountant qualified in 2012. He specialized in service tax and GST under both advisory and litigation. He has been associated with A.R. Krishnan and Company Chartered Accountant for past 17 years, and he has been assisting A.R. Krishnan sir in various academics professional pursuits, including the representation before the authorities for various tax matters. He has also written various articles and lectured at various forums on service tax and GST. So, friends, with this very brief introduction and highly knowledgeable person, I would request him all to please welcome him. And Srikant, over to you. Please take forward the session.
Yeah. Thank you, Zenith, for your kind words. I'll just share my screen first.
Yes.
Is my screen visible now?
Yes, it is visible.
Yes, it
Yeah.
is visible.
Yeah. So this topic today, which has been given, is like recent judgments on service tax and its applicability in GST. So what I have tried to do is I have tried to look at past few cases, tribunal judgments or court decisions which have been reported in last 1 year and 2 years. That is 2019, 20, 1920 and 2021. And I've tried to take out those judgments which I felt may have a significant implication in GST also. So we'll start one by one taking up each case laws. Now this is the first case law which I have taken. That is 3 Infotech. This is a Madras High Court decision. Now this is a
I'm
case.
sorry to cut you. I'm
Uh-huh.
not able to see your presentation actually.
Yes,
So, is your
Srikant, what is seen as only your the folder which is there open.
Okay, just
So you will have
a
to change the screen. Yes.
minute, just a minute. Is it visible
yeah
now?
now
Yes,
yes,
we
now
can
it
see.
is visible, but still you can maybe
Uh-huh.
go to your presentation mode. That would be.
Yeah. It's okay now, na? You are seeing the
Yeah,
only
Srikant, bhai, we
slide
can
now, na,
see
in the
it.
presentation mode.
Yes.
Yeah.
Uh,
Okay, thanks. So this is the first case law which I have taken. This is a case of 3 Infotech Limited. This is a Madras High Court decision. Now this is basically dealing with an issue of limitation. So I will briefly state out what all the facts which was there in this case. In this case, the SSE during the financial year 15-16 had rendered a service to a client which is situated outside India. Now it didn't knew that it was an export of services, so it had paid service tax in respect of these services which it had provided. Now the date I have tabulated the dates on which it has made the payment. Like it has made a payment on 7th April 2015 for an amount of service tax of rupees 4.40 lakhs. And in post July 2015, it paid an amount of 5.32 lakhs as a tax in respect of these services which it had provided to overseas persons. The total service tax payment made by it was somewhere around 9.72 lakhs. Subsequently, it realized that its services were qualifying as an export of service under Rule 6A of the service tax rules. So it had made an application for refund of the tax of the entire 9.72 lakhs which was paid by it on the premise that the tax was paid by it under a mistake of law. Now, adjudicating authority granted refund of rupees 5.32 lakhs. That is what the adjudicating authority did was it considered the date of filing refund application as 30th June 2016 and it took so when it saw the date of payments, dates on which the payments were made, it said that the payment which was made on 1st July 2015 is refund claim is within 1 year from the date of payment of tax, so that refund it allowed. As regards the payment of tax which was made on 7th April 2015, since there was a time gap of more than 1 year between the date of payment of tax and the date of claiming of refund, it had rejected the refund claim. So the matter went up to the tribunal. The tribunal also held that the refunds under service tax are governed by Section 11B of the Central Excise Act, which is made applicable to service tax also. And it said that the refund has to be granted only in accordance with the provisions of Section 11B of the Central Excise Act. So 11B of the Central Excise Act mandates that the refund has to be, a claim has to be made within 1 year from the date of payment of tax. So the denial of refund of 4.40 lakhs done by the adjudicating authority was upheld by the tribunal. So the matter, the appellant SSE had then appealed to the Madras High Court. The issue which was raised was whether the claim for refund of tax payment made under the mistake of law would be governed by limitations specified under Section 11B of the Central Excise Act, made applicable to service tax. So we will now see what did the court observe. The court basically relied upon 2-3 earlier judgments of the High Courts. The first court judgment it relied upon was a decision of the Gujarat High Court in Oil and Natural Gas Corporation. So it wanted to this case laws are being relied to draw a
Srikant,
proposition. Yeah.
I'm so sorry to bother you in between, but I think your
Uh-huh.
slides are not going further. So,
Achha, it's not.
since you have given this ONGC case law in your presentation, so
Uh-huh.
you are still, we are still able to see only your first slide of 3i Infotech.
Okay. Just a minute.
So, what you need to do is probably press F5 and then go further, na?
You see. Okay.
One more slide further, ONGC is there. Okay, fine.
Yeah.
So,
Now
what
it
you
is
can do
visible.
is, yeah. So, you are on the issue slide right now.
Huh.
Yeah, now we are. So, probably
Can
you
you do it on the
can,
presentation mode? On a
Pardon me?
presentation mode.
yeah, you need to.
I was doing a presentation mode only, but I felt it is moving for everyone.
No,
Now
so
I'll just
once,
move. Huh.
yeah,
I'll
yeah,
just move
yeah,
one slide
yeah.
further. Let me know whether it is moving or not. Is it moving now? I'm on
No,
slide number
so
4.
what happens now? No, Srikant, you are still on that issue slide, and we can see your this thing only. So you need to
Okay.
go to the another window basically. Once you open this,
Huh.
another window comes in the screen sharing.
Huh.
So this will remain in your background, and your actual presentation will start moving.
Pardon, I didn't get this. Another window, I didn't get it. How to?
Alt tab. Or you can continue with this also, probably.
Without the presentation mode, you are saying, na?
Yeah.
Okay, just a minute. You are seeing in the presentation mode, or you are seeing it in the normal PPT mode?
Normal PPT.
Normal PPT only. Okay. Just a minute. So I'll do one thing. I'll just stop for a minute sharing. Hold on.
Yeah. Yeah, now it's presentation.
Now it is presentation mode. I'll just try to move a slide for
Yes.
the front and back, and you let me know whether it is moving. this is on slide 3 now. You are also able to view my slide 3 issue slide.
Yeah, we are on issue slide now.
Okay, now I'm moving the next slide, that is slide 4. It has moved.
Yeah, it is more.
Okay, okay. So
You
shall I
can
continue
continue.
now? Yeah, yeah. So sorry for the inconvenience. So basically, what the High Court, before the High Court relied upon two earlier decisions of the other High Courts. Like first decision it relied upon was a Gujarat High Court case, in case of ONGC case, wherein it was a case where the SSE had paid oil cess, on which oil cess he has paid the education cess and she cess, by assuming that oil cess was also in the nature of an excess duty, and subsequently when it realized that oil cess was not education cess and she cess was not leviable on the oil cess, it applied for a refund of the same. The court observed that since oil cess was not in the nature of an excise duty, the amount of education cess and she cess paid was only an amount paid under the mistake of law. Since the same was not in the nature of education cess and she cess, the provisions of section 11B of central excise would not be applicable. It held that the limitation prescribed under the Limitation Act would be applicable and not the limitation prescribed under the Central Excise Act that would be applicable. Then it further observed that even in cases where an amount is paid by way of a self-assessment, in the event of any amount has been paid by mistake or through ignorance, it is always open for the SSE to bring it to the notice of the authority concerned and claim refund of the amount wrongly paid. The authority concerned is also duty bound to refund such amount, as retention of such amount would be hit by Article 265 of the Constitution, which mandates that no tax shall be levied and collected except by authority of law. Then it also relied upon a Bombay High Court case of Parijat construction. There is wherein it was held that since the construction service in that particular case is not liable, tax paid for the associate claim the refund of the tax which was paid by it. That High Court held that the limitation period would not be applicable. So the based on these High Court decisions, the in our case, this is the Madras High Court came to a conclusion that when service tax is paid under a mistake of law, that is under mistake, a claim for refund would not be barred by limitation. The limitation period of 11B of 1 year would not be applicable. It also observed that if revenue is allowed to keep this service tax paid, it would not be proper and it would be against the principles of Article 265 of the Constitution. Therefore, the amount which was paid beyond the 1 year, that is for in our case, this first amount 4.40 lakhs also, that High Court held that it is eligible for refund, though it has been filed the refund claims beyond the period of 1 year from the date of payment of tax. Now, this proposition which is coming out from this decision is in case where the tax is paid under a mistake of law, or so suppose that there is no levy such could be a tax which could be levied on such transactions. In such cases, the limitation period will not be applicable. So now the issue is whether this proposition can be applied under the GST regime, because section 11B of the Central Excise Act is more or less akin to our section 54 of the CGST Act. So anybody has any views on this, whether these principles can be applied under the GST regime?
Can I come in?
Yeah, please go ahead.
See, basically the legal principle that even the government cannot be unjustly enriched, because under the Constitution it has a right to collect taxes. So wherever it is proved that whatever gone to the government is not a tax or was not supposed to be a tax, and it has gone to the government treasury, then these cases would squarely apply. But here the rider is that if you have collected as a tax, then whether the same provisions will be applicable or not is an issue.
Yeah, that I agree. That will be a challenge if I have collected that. Would I be that unjust enrichment provisions will come into play, denying me to get the refund?
Yes, yes.
Yes. So, any other views on this point? Okay. So, shall I proceed?
Yes, sir.
So yeah.
Yes.
So the applicability of the decisions under the GST 54 is also akin to parameter with 11B. So the proposition may be applicable in case where GST has been paid under mistake of law. That is what my view is on this regarding this case law. But an argument can be raised that the limitation claim can be set to be a limitation period of 2 years as specified under section 54. However, since the Madras High Court relied upon the Gujarat High Court case, which had said that in such cases the Limitation Act will apply. That is, if I come to know about the mistake, then I have to make an application within 3 years from the date when the mistake came to be known to the person. So that time limit of Limitation Act of 3 years may apply, but the limitation period of 2 years as specified in the CGST Act may not be applicable. However, we'll have to wait till because these propositions are to be tested under the GST law. But if you have a good feeling, this will be applicable in GST too. So I proceed to now to the next case law.
So I can I raise one query?
Yeah. Please go ahead.
So say for example, if for a particular transaction a person has wrongly paid CGST and SGST, and suo moto he identified maybe during annual filing time or so, and he paid IGST. So can we say that this CGST and SGST paid earlier would be tax paid mistakenly, and the benefit of this judgment will be available, and from that date 2 years is to be calculated or 3 years?
No, from that date, see, suppose that the levy of CGST and SGST was not there in that particular transaction. It was a transaction wherein IGST was leviable. So we can take the benefit of this judgment, but even if you make an application, there will be a definitely litigation on this point. There's no doubt that, but you can take a stand by taking recourse to this case law that limitation will be of at least 3 years from the date when you came to know about it, that where there was a mistake, you have paid the tax under mistake. So from the date of annual return, if you came to know on the date of filing your annual return, from that date you can take the period limitation period starting.
Okay, thank you.
But here, one point, Srikant, in this matter, it is certainly a tax. The CGST and SGST or IGST, the kind of tax which you paid is different, but it is certainly a tax. Then how do you say that this case law will be applicable? Because in that case, on export, the tax was not applicable at all. In his query, which has been raised, there is a tax. Now, it is a tax. Only the nature of that tax is different. Instead of it is CNS. So it is certainly a tax. Then can you still say that this will be applicable?
Sir, that is what I said. There will be a challenge because that levy, you have to first establish that the transaction or the supply which had taken place was an on which only IGST could have been attracted, and there could not be CGST and SGST which can be attracted on that particular transaction. Once that we are able to establish that levy is not getting attracted on that particular, we'll have to then articulate that is unconstitutional. Article 265 does not permit to collect tax on that, because it's an interstate supply on which IGST is only attracted. You cannot levy a CGST and SGST on that. We'll have to articulate
one more
that. Otherwise,
thing.
But one more. Vikram sir, sorry.
No, you continue. I'll see before. Okay, Jineet. See, there is one more issue. You said from the date you came to know. Now, how do you prove that you came to know on annual return day or this day or that day? Because that is something which you have to prove, because you have to prove 3 years.
Yeah, I agree that there will be a challenge on that aspect. Department will definitely refute this position that how department is to know that you have came to know or this date, but we'll have to build up some case like that, like what point we came to know. It's a factual aspect, case to case basis. We'll have to decide that.
Okay, so you are of the opinion that in a given situation, the date on which the transaction happened and the date on which you came to know of the transaction can be different, subject to proving of the fact.
Yes, sir. That is my view. Yeah, that's what I hold.
Okay. Yeah, Jinit. Yeah.
No, I was supposed to raise that point only what you raised, And however, if we consider that this is not a tax at all, then there were might be other repercussions of interest on the IGST actual liability. Why they are not
Yeah,
collecting interest if there is a wrong payment? Because there is a tax
huh,
collection happened, and because of that there is no interest, and they can do the adjustment. Agar now if we go back and say this is not a tax, we want refund beyond the relevant date, then might be an interest implication on the
interest
actual
liability.
liability that we. So that
Yeah,
would
I
be a
agree.
practical problem to this.
I agree. I agree that Section 77 का benefit will not be available to us if we say
Exactly,
that way.
exactly,
Okay, yeah, there will be a challenge of payment of interest on that aspect.
exactly.
So, shall I move ahead now on the second case study?
Yes.
Yeah. Now, this is a Schlumberg Asia Services. This is actually a transition period issue. Now, the facts of this case are that the appellant had an unutilized closing balance of education cess, she says, lying in its account as on 30th June 2017. It had transitioned this closing balance into its electronic credit ledger through Tran 1 also. However, subsequently, due to the retrospective amendment in section 140, wherein the word eligible duties were brought in, so it had immediately realized that education session she says cannot be transitioned into Tran 1. So it immediately made it reverse the ITC, which it had brought it into electronic credit ledger and applied for a refund. The date of application was 30th August 2019. The department had objected that refunds of this cess was not possible as the same was abolished way back in 1st June 2015. Then it also raised a ground that the appellant had not claimed refund under section CGST under section 140 of the CGST Act as the credits were transitioned in the GST regime. It also said that the refund ought to be filed within 1 year from the July 2017, and the claim which was filed on 30th August 2019 was hit by limitation. So the issue which comes up now is whether this education says, she says, and KKC lying in closing balance as on 30th June can be claimed as refund because those credits are not eligible to be transitioned into GST credit ledger. Now, this is a case which is lying in both GST and service tax regime. The tribunal's observation in these aspects were, as per section 140 of the Act, education and KKC cannot be transferred to GST account. It is only in the nature of lying in the books of accounts of the SSC in the nature of a education cess and CSS. So, therefore, the law which would govern the refund claim in respect of this refund claim would be the existing law and not the GST law. Then regarding the second aspect of time bar, it said that the amendment itself had come on 30th August 2018. That is after more than a period of 1 year from the GST regime had started. So at no point of time the SSC was in a position to claim this refund because he didn't knew that transitioning this education session is not permissible under the electronic credit ledger. He came to know about it only on 30th August 2018. So the time limit of 1 year, if at all, it has to be considered. It has to be considered from the date of 30th August 2018. That is when that amendment in that CGST Act had come into force. Now, this is the third aspect, which is the most crucial aspect of this case law, which says that whether it is eligible to claim the refund of such education sessions, she says. Now, in this, for this, the tribunal had relied upon a Delhi tribunal decision in case of Bharat Heavy Electricals Limited. Now, in this case, this Bharat Heavy Electricals Limited case, the SSC was in the business of manufacturing electrical plants and all those things, and he was having a credit which was standing in his books of account. It could not transition those credit, though it was eligible to claim that refund of that credits on account of export of goods and all those things, but it hadn't applied for that. But as and when the GST regime came, it felt that since it cannot transition it any longer in the GST regime, it had applied for a refund. So the court's observation in those cases are as I have reproduced here. There is no dispute on that. I just read out because it is very important so that we can all be on the same page. There is no dispute that on 1st July 2017, the cess credit validly issued in the accounts of the SSC and very much utilizable under the existing provisions. The appellant could not carry out the same under the GST regime. Thus, the appellants were in a position where they could not utilize the same. We agree with the learned counsel for the appellant that the credits earned were a vested right in the terms of Honorable Apex Court judgment in Eicher Motors case and will not extinguish with the change of law unless there was a specific provision which would debar such refund. It is also not rebutted by the revenue that the appellant had earned these credits and could not utilize the same due to substantial physical or deemed exports where no central excise duty was payable, and the appellant had chosen to do so. Had the appellant chosen to do so, they would have been eligible for the refund or rebates under the existing provisions. Then it further observed, there is no provision in the newly enacted law that such credits would lapse. Thus, merely by change of legislation, suddenly the appellants could not be put in a position to lose this valuable right. Thus, we find that the ratio of the apex court judgment, that is, they had tried to rely upon the case laws of that Slovak engineering, wherein it was held that where the SSC is not able to utilize the SENVAT credit, it will be eligible in the refund of the same. Accordingly, it held that the SSC is eligible for cash refund of the cesses lying in SENVAT trade balance. Now, this is a case wherein it's directly more or less a tribunal decision. I think it will be going to a higher forum because this will not be getting settled over here. And we'll have to wait because this refund of education season, she says, was always a challenge. So, one of the point is that like this proposition will be applicable even in cases like where the SSC has forgotten to take some credit. Like we many times come across cases like people had some SENVAT credit balance in their accounts, they didn't show it properly in their ST3 returns, or it was not taken in their books of accounts also, as well as not shown in ST3 returns. Such cases do appear. So SSC is eligible. It has taken in. It is appearing in its SENVAT credit account, but not shown in ST3 return, and it could not be transitioned. Whether this proposition would be applicable to claim refund in those cases, that is the issue we will have to examine. In my view, it appears since this is a case law which is directly based on this transition issue, one may have a case, but we'll have to wait because this decision may go up to higher forum like Supreme Court or High Court, and then there will be what the court says. We'll have to wait and watch. But according to me, this case law would be relevant because this SENVAT credit balance which is lying or one could not transition. What happens to that? Because there is no provision under the GST law which says that you cannot transition. It says that you transition to electronic credit ledger. It doesn't say that will get lapsed, or even the SENVAT credit rules 2017 which has come subsequently. It only directs that you will have to transition it to electronic credit ledger, but it doesn't say what happens if it doesn't SSC doesn't transfer. So we'll have to just see. According to me, this will be a good, very significant case law in future. Any views on this particular case law?
Shrikant, whether the similar provisions would apply to PLA balance lying of the excise manufacturing unit, especially in case of backward area units or where they were getting subsidies, like where there were notifications like Jammu and Kashmir or something like that.
PLA balance lying in their PLA account. I think should be this proposition we'll have to articulate that, but this proposition has to be, we'll have to advance this case more further. Then only this law will evolve. It's still evolving, so we will not be sure, but I think it should be granted based on this decision. The way it has been given, the reasoning, I think there's a logical reasoning in that. So one should be eligible to get similar benefit in that cases also.
Thanks.
Okay.
There is
any other views?
One observation is that there's a judgment of Slovak India, Union of India versus Slovak, rejected the departmental appeal against the decision of the Honorable Sept, holding that the taxpayer is entitled to the refund of the closing credit balance when the said taxpayer goes out of one-VAT scheme, or when the unit is closed in absence of any provision allowing such refunds. Further, one Supreme Court judgment is dismissed the department SLP on the basis that the decision relied upon by suspect when allowing the appeal has not been challenged by the department. So in this case also this can be applied.
Yeah, this Bharat Heavy Electricals has relied upon the same this Slovak Karnataka High Court and
Yes.
the Supreme Court decision. But the only challenge one may face is that that Karnataka High Court decision, which was there in the Supreme Court, that SLP has been dismissed, and it's not
Yes.
like a civil appeal has been dismissed. So it may be just doesn't become a binding precedent
That one
as such
more.
of a Supreme Court decision. Yeah,
Yes. If it has been a civil appeal, then it would have been a binding
it
precedent.
would have been a
Since
better case for all the SSEs to claim
SLP
that.
has been dismissed, one more opportunity may be given to the department.
Yeah, yeah, yeah.
Department can again pursue the case.
Yeah. That doesn't become settled law then.
But there is a constitutional bench judgment where it says that if there are department judgments, earlier judgment which has not been challenged, then subsequent judgments on the same footing relying on that cannot be challenged. There are income tax rulings and all those rulings are there. So we have to see
Okay,
whether
okay.
this case they forget or not.
Yeah.
Because because it has been clearly said that the department cannot pick and choose. If he has left it for other assessees, then
Hmm.
subsequent assessees they cannot move into this can
Okay.
pursue the case at the higher forum.
Okay. I think we will have to explore this. This argument should also be
Yes.
good.
Yes.
Any other views on this case law? So shall I move ahead? Yeah. So this is the next case law, which is GET&T India Limited, which is also a Madras High Court decision. Now this is a case of usual this notice pay, which was recently being a big issue around all those whether the notice pay received to the employees is liable for any sales tax or not. But this decision has laid down some good reasonings for that. We'll just go through this. So this will the facts of this case are that the petitioner is a company assessed for service tax. The terms of the employment of the petitioner company included a stipulation in the employment contract that a notice period prior to quitting from the employment ranging to from 2 to 3 months should be given. An option is also provided to the employees to the effect that if they are not in a position to stay and serve out the notice period, then in lieu of the same, the employee will be required to pay the equivalent pay of salary for the pay for which the notice was not served. The petitioner in this case had received certain amounts in lieu of this such notice period from the outgoing employees. Now, the revenue had argued that these receipts would attract the provisions of Section 66E, which is that agreeing to tolerate an act or obligation or situation or do an act, and it would constitute a taxable service. The petitioner has tolerated the act of immediately quitting from service by the employees, and such agreement or toleration results in a rendition of a taxable service. The issue before the Madras High Court was whether the notice pay received by the SSE would be liable for service tax under the required service of 66E, that is, obligation to refrain from an act, tolerate an act or a situation, or to do an act. Now, the observations of the High Court are very significant. The court observed that objecting to the objective of putting the such notice pay clause in the terms of this employment as it is incumbent upon the employee to put the employer of a notice. That is, the court is first observing why is this clause being put, why this notice pay clause is being put in the employment contracts. So it is observing that it is incumbent upon the employee to put the employer to notice in advance of a stipulated period to enable recruitment of a new employee and smooth transition of the work carried on by the employee who proposes to quit. It also facilitates a situation where the employee may desire immediate quitting by enabling him to do so. However, also ensuring that some compensation is paid provided to the employer by virtue of the sudden and unexpected termination of duty. Now, the court for deciding this issue, whether it will be falling within this clause of 66 agreeing to tolerate or not, it relied upon the education guide of para 2.9.3 of the education guide. Now, the question which was this is raised is that whether that any amount which is paid by the employer would the amounts received by an employee from the employer on premature termination of a contract of employment be chargeable to service tax? That is, if the employer has paid some amount for an employee to at the time of leaving or to asking him to go at an early stage, would those amounts be liable for service tax? So the court, the education guide had clarified, no, these amounts are in the nature of an employment service only, so this would not be liable for service tax. However, it said that if the employee is given any amount for joining a competing business, like not joining a competing business, then that amount would be liable to tax under the category of this agreeing to tolerate or forbearance of an act. Now, the court then observed the query raised relates to a contra situation, that is an different situation, wherein exactly opposite situation, wherein the employee paying some amount to the employee, and came to a conclusion that where amounts have been received by an employee from the employer by reasons of premature termination of contract of employment and the taxability thereof, the board has answered it in negative, that such amounts will not be liable for service tax. So then the court further proceeds to say, equally so, in my view, the employer cannot be said to have rendered any service per se, much less a taxable service, and has merely facilitated the exit of the employee upon imposition of a cost upon him for the sudden exit. The definition of clause E of section 66E as extracted above is not attracted to the scenario, as in my considered view, the employer has not tolerated any act of the employee, but has permitted a sudden exit upon payment of a compensation. Then it further observes that normally a contract of employment, qua an employer and employee, has to be read as a whole. There are situations within a contract that constitute rendition of a service, such as breach of stipulation of a non-compete. That is, if the contract of employment provides that if the employee while leaving, he will not be joining a particular competitor's business, non-compete clauses. So in that scenario, if an amount is being paid to the employer to the employee, such amounts would be liable for service tax under the category of 66E, forbearance of an act. But notice pay in lieu of sudden termination does not give rise to a rendition of a service either by the employer or the employee. So this is the applicability of this under the GST, according to my view, is like amounts paid to them by the employer to the employee for premature termination of a contract of employment are treated as amounts paid in relation to services provided by the employee to the employer in the course of employment. It will be considered as a consideration for provision of employment services and would be neither a supply of goods nor a supply of service falling under para 1 of schedule 3, because that para 1 of schedule 3 deals with that employee services. Then amount paid to employee for not joining a competing business would be liable to tax as being paid for providing the services of forbearance to an act. This will fall under that section para 5e of schedule 2, which deals with that agreeing to tolerate an act. And notice pay in lieu of sudden termination does not give rise to rendition of a service either by the employer or the employee. It is a compensation paid to the employer by the employee by virtue of sudden and unexpected termination of duty and not in the nature of a consideration for provision of any service. Now, this case law, which is in the service tax, I think would be holding field even in the GST regime, because notice pay also is a nature of a compensation. The nature of the court has clearly held that it is not in the nature of a consideration, but it is a compensation which is paid to the employer for sudden and unexpected termination of the duty. So, according to me, this position will hold good even to the GST regime. So, any views on this case law? Any member people would like to comment?
So just a point to make, whether similarly it will applicable to the specific facts pertaining to notice pay only, or other such items where we are saying it is not an agreement, because the most common being a works contractor not doing something and a penalty clause, or retain, I mean 5% penalty clause for not completing in time, and all those things
Yeah, yeah.
also will be applicable over
No,
here considering this judgment.
no, no. This in those cases also I've taken up one more case directly dealing with those kind of situations. So there also the same view is applying, but this is I had taken only from the point of view of notice pay particularly, because notice pay is received and would be received here. But
Okay.
even in respect of penalties also, I think the same proposition, because if it is not in the nature of a consideration, so it will not be liable is what I hold. I will take a case law immediately afterward, this case law dealing with similar
Okay.
situations.
Yeah. Okay.
So shall I proceed further? Okay. Now, this as discussed, as pointed out, this is the similar case law, but in the context of this compensations, penalties, and liquidated damages. Now, this appellant here, in this case, Southeastern Coalfields case, was in the business of mining and selling of coal, which is an accessible goods. It operated in 18 different offices. Now, it had in commercial contracts entered during the course of this business certain clauses providing penalty for non-observance of the terms of the contract had been stipulated. According to the appellants, these clauses had been provided to safeguard its interest of the appellant. Now the issue is like during the period July 12 to March 2016, it had received certain amounts under the commercial contracts. There are basically categorized into three broad categories: compensation or penalties from buyers for not lifting the proper agreed upon quantity of coal, or in the nature of forfeiture of the earnest money deposit which is given; compensation of penalties from the contractors who are engaged for providing various types of services for breach of the terms and conditions of the contract. How it was pointed out now, like the contractor is not doing the job, so within the time or some amount of penalties levied upon him for violating some terms or the conditions of the contract, and also liquidated damages from the suppliers of materials for breach of the terms and conditions of the contract. So that during this period, the appellant had received these three amounts under the various clauses of the various agreements that it was entered into by it. The revenue had sought to demand service tax from the SSE on the above receipts under Section 66E. Based on the reason that by collecting the said amounts, the appellant had agreed to the obligation to refrain from an act or to tolerate the non-performance of the act or to non-performance of the terms and contract of the tolerate the non-performance of the terms of the contract by the other party. So the issues which arise for the consideration was whether the following amounts received by the SEC, namely compensation of penalties levied and recurred for non-compliance with the terms and conditions of the contract, forfeiture of earnest money deposits or security deposits, and liquidated damages for are liable for service tax under the declared service category of agreeing to the obligation to refrain from an act or tolerate an act, or do an act or situation. So what are the observations of the tribunal? The tribunal observed. I'll just read out this judgment because this is some wordings and wordings of this tribunal decisions are very relevant, so we should notice those. What follows from the aforesaid decision of the Supreme Court, Bayana Builders and Intercontinental Consultants, that is the tribunal had relied upon these cases of Bayana Builders and Intercontinental, came to the conclusion that the consideration must flow from the service recipient to the service provider and should accrue to the benefit of the service provider, and that the amount charged has necessarily to be a consideration for the taxable service provider under the Finance Act. Any amount charged which is no nexus with the taxable service and is not a consideration for the service provided does not become part of the value which is taxable. It should also be remembered that there is a marked distinction between conditions of to a contract and considerations for the contract. The recipient may be required to fulfill certain conditions contained in the contract, but that would not necessarily mean that this value would form part of the value of taxable services that are provided. That is, a service recipient is supposed to provide something to the service provider. So the court is taking the view that whatever is being provided by the service recipient, that will not necessarily take the character of a consideration for the services that is being provided by the service provider to the service recipient. It further observes that it is in the light of what has been stated above that the provisions of Section 66E have to be analyzed. Section 65E44 defines service to mean an activity carried out by a person for another for a consideration and includes a declared service. One of the declared service contemplated under Section 66E is the service contemplated under Clause E, which is service of agreeing to the obligation to refrain from an act or to tolerate an act or a situation or to do an act. There has therefore to be a flow of consideration from one person to another when one person agrees to the obligation to refrain from an act or to tolerate an act or a situation or do an act. In other words, agreement should not only specify the activity to be carried out by a person for another person, but should specify the consideration for agreeing to the obligation to refrain from an act, or the consideration for agreeing to the tolerate an act or situation, or consideration to do an act. So what basically the tribunal wants to say is that the agreement to fall within this category of 66E, that is agreeing to the obligation or forbearance, the agreement should specifically provide that what the person is supposed to do or what he is supposed to forbear, and then there has to be a consideration for that. then only it will fall within this clause. This will we'll see in the next few paras of this court judgment, wherein it is making some significant observations. Thus, a service conceived in an agreement where one person for a consideration agrees to an obligation to refrain from an act would be declared service under section 66E, read with section 65B 44, and would be taxable under section 68 at the rate specified like in section 66B. Likewise, there can be services conceived in agreements in relation to the other two activities referred to in section 66E. Now, it is further observing it is a trait that an agreement has to be read as a whole and so as to gather the intention of the parties. The intention of the appellant and the parties was for supply of coal and for the supply of goods and for availing various types of services. The consideration contemplated in the agreement. Pardon me? Okay. The consideration contemplated under the agreement was for such supply of coal, materials, or for availing the various types of services. Now, this underlined portion is very significant. The intention of the party certainly was not for flouting the terms of the agreement so that the penal clauses get attracted. The penal clauses are in the nature of providing a safeguard to the commercial interest of the appellant, and it cannot be by any stretch of imagination be said that recovering of any sum by invoking the penalty clauses is the reason behind the execution of the contract for an agreed consideration. So what it wants to say is you have to look at the intention of the parties. The intention of the parties is to get the performance of the contract done. In the to enforce that or to show the seriousness of that intention, they are invoking penalty clause, and whereby some damages are also quantified. Okay, if that particular terms and conditions are not fulfilled, so and so penalties will be levied. So, but that intention of the parties is never that other parties should break the terms of the conditions, and I should be entitled to get the penalty, or I should be entitled to recover the penalty from him. It is not the intention of the appellant to impose any penalty upon the other party, nor is it the intention of the other party to get penalized. Then it further observes, it also needs to be noted that section 65B44 that service to mean an activity carried by a person for consideration. Explanation A to section 67 provides that consideration includes any amount that is payable for the taxable service provided or to be provided. The recovery of liquidated damages or penalty from other party cannot be set towards any service per se, since neither the appellant is carrying out any activity to receive the compensation, nor can there be any intention of the other party to breach or violate the contract and suffer loss. The purpose of imposing compensation or penalty is to ensure that the defaulting is not undertaken or repeated, and the same cannot be said to be towards toleration of the defaulting party. The expectation of the appellant is that the other party complies with the terms of the contract, and the penalty is imposed only if there is a non-compliance. It further illustrates the court for the tribunal further illustrates what kind of a contract or situation will fall within that declared service of forbearance of an act or agreeing to do an act. It observes the situation would have been different if the party purchasing coal, that is the appellant in this case, had an option to purchase coal from A and B, and if in such a situation the A and B enter into an agreement that A would not supply coal to the appellant provided B paid some amount to it, then in such a case it can be said that the activity, that is the activity between A and B, may result in a deemed service contemplated under section 66E. So the conclusion which the tribunal draws from these above observations is that the activities that therefore that are contemplated under section 66E is when one party agrees to refrain from an act or to tolerate an act or to do or to a situation or to do an act are the activities where the agreement generally specifically refers to such an activity, and there is a flow of consideration for that activity. That is the it should be clearly specified that this is the activity which that is that other party is supposed to forbear, and for this forbearance there has to be a consideration, then only it will fall within the 66E. So now we are examining whether this decision will be applicable under the GST regime also. The proposition of these decisions are under the GST supply has been defined as section 7 provides that for the purpose of this act the expression supply includes all forms of supply of goods or services or both made or agreed to be made for a consideration. So that's very clear that for a supply to a transaction to be qualifying as a supply under the GST law, there has to be a it has to be made for and agreed to be made for a consideration. Thus, the amount paid should be in the nature of a consideration, and it must flow from the recipient to the supplier and must accrue to the benefit of the supplier. Activities that are carried out by the service recipient as a condition of a contract would not be considered as a consideration for services provided. Intention of the parties is relevant, and the consideration contemplated under the agreement is also needs to be looked into. Just because penalty has been prescribed in the agreement, that doesn't mean that it is a consideration that if the party flouts that or breaches the terms of the condition of the contract, that penalty paid takes the character of a consideration. That is, we have to interpret the agreement as a whole. What is the purpose of that putting that penalty or damages clause in the agreement, and whether it is to deter the party from violating the terms and the conditions of the contract, or is it a separate service as such which is needs to be examined. Recovery of liquidated damages or penalty from the other party cannot be set towards any service per se, since neither the appellant is carrying on an activity to receive compensation, nor can there be any intention of the other party to breach or violate the contract or suffer a loss. So, the substance which I am drawing from this case law for the purpose of GST is that to fall under this para 5 clause C of schedule 2 of the CGST Act, that is the agreeing to obligation to refrain from an act or tolerate an act or situation or do an act. One party agrees to refrain from an act or tolerate an act activities where the agreement should specifically provide that this is the activity that needs to be tolerated or refrained, and there has to be a specific flow of consideration for that activity. Then only one can say that clause 66, that para 5 of schedule 2 will be attracted. Otherwise, in all cases, how the department is now going on issuing like this is an agreeing to tolerate an act, for that this is a compensation, that view should not be taken. We have to take that refer the agreement as a whole and apply the propositions which is laid down in these cases to come to a proper conclusion. So, any views or comments on this? Anybody would like to discuss further anything on this?
Yes. Can I come in?
Yeah, please. Yeah.
Okay, sorry. Yeah, actually, I'm part of a company where we deal and buy same from these people only regularly, SCCL, WCL, coal. All right. Whenever, so we have linkage contracts with them as well as spot contracts or auction. So whenever there is a short lifting as compared to the contract, they automatically charge us they forfeit our EMD as a liquidated damages and charge GST. They're doing it regularly. No questions asked. And of course, being monopoly, we don't have too much options but to argue. Yeah, we don't have too much choice. But now, can we rely on this to say that the same ratio that the penalty liquidated damage is only for deterrence, and it cannot be construed that there was only a means to supply. There was no supply involved in a liquid.
You will be paying their penalty charges to those people. No?
Yes. Yeah. Correct. So, but they're collecting GST.
Are they charging you?
Yes.
Achha, they're charging GST on that.
That's what I'm saying. Regularly, full GST they're charging at 18%. And there is a differential. The coal is at 5% GST.
I agree. But
because this liquidated damages, so that chapter changes, so they're charging 18% on the damage portion also.
Okay. Now you are in a situation that you are being charged a penalty, and the persons are also charging GST of 18% on over and above the penalty amount. And you are in a now. If this judgment is definitely will be according to my view, because this is under the service tax law. But according to my view, this should hold good even under the GST regime. Going by the proposition of this, the penalties or the damages or the EMD which is forfeited by them should not be liable for any GST. Now, if you ask them, I don't think they will be, because this is a position which they have to take, whether they should charge GST or not.
Correct. Yeah, correct.
But they might be taking a view by anyway the front person is getting more or less in the GST regime everybody has taken a view if so long as credit is available and it is not block credit, why break our head, let's go ahead. That's what the view everybody is taking.
Sorry to interrupt.
I agree with your situation.
We are a power company, we are blocked. That is the problem. Our block credited, that is the biggest issue.
Yeah. So what I would suggest is in those cases, see, even if you go and ask, show them this judgment, they will say, why we need to break our head, why we need to argue and litigate and all those things.
Yeah, yeah.
But definitely you can go for a refund, because if it's a borne by you, so if you are the buyer of the goods, so I think you should be in a position to claim. You will have to go for a refund, because if they are a big brother and you are a smaller brother,
Yeah,
so
yeah,
you
yeah.
cannot ask them to
Are
do.
they are
Yeah,
not
so you will
doing
have
it.
to
Gautam
definitely go
Panaka.
for a refund.
So
You may
basically
have to go.
Srikant,
Yeah.
so is it the
can I
same
come in?
stand we have to take? Same stand do we have to take that that this is not a
Yeah,
service
yeah. You
and
will
not
have to
a
take the same stand that ki this is a, according to my view, you can take the same stand that ki this is a penalty. This is in the nature of a damages. So this should not be a consideration for a supply. There is no GST that is leviable on this. The seller has charged me GST on this. I have won the incidence of GST. So since it is not leviable to GST, I am entitled for a refund of that GST.
okay, okay.
Yeah, yeah.
Srikant,
And and
can
and
I come in?
and
Pardon me, sir.
sorry, one last question. Sorry, one last and the time. Sorry, one last question. Time limit also will be again time limit issue will come. Time limit. So it will be again 2 years or that 3 years. That again time limit issue also will come because we have been paying for last 2 years penalty like this.
Yeah. But you will have to say ki, you came to know about this. You will have to establish that you came
Yeah,
to know about this now, and
yeah.
based on that, you are making an application for that refund and all those things.
Okay. Thank you very much. Sorry. Thank you.
Probably you can take the decision of this tribunal decision, something like date of this tribunal decision, and from that you came to know something like that. You can try to build up a case. These
Okay,
decisions
okay.
have come only in 2020, na? So there is a
Yes, yeah.
time gap
So
of
there is a
from that period. Yeah, that way you can try
okay.
to build up a case. Yeah.
So
Srikant,
Yes, sir.
see, there is a variation in the situation which he is telling you and the situation which we have considered over here. Whereas
Okay.
in his case, what he is saying that you are supposed to lift every month, let us say 10,000 tons. And when
agreed.
you are lifting
Correct.
10,000 tons, you were given an X price, let us say 200 rupees per ton. But if you are lifting,
Hmm.
let's say only 8,000 tons,
Correct.
Hmm.
then I will bill you for 10,000 tons. Because he did not lift 2,000 tons, the
Hmm.
value of the 2,000 tons is sought to be recovered from him as a consideration for agreeing to lift 10,000 tons. So, can
Uh,
you call this particular preposition as a penalty for a contract? It's like a minimum guarantee. See, when a person
Hmm.
purchases 100 quantity from you, you are bound to give him a discount of, let's say, 50 rupees per
Hmm.
unit. But if
Yeah.
he does not take 100 quantities, then your
Huh.
rate for carrying 50 quantity was different or would have been different. And that's why this
Huh.
amount cannot be exactly akin to the penalty, which is for non performance or bad performance or not finishing in deadline or shabby work or etc. etc.
Okay.
just
Okay. See.
just to add to this point as Vikram Bhai was making, the fact remains is you see what typically happens is we are not charged the full differential quantity of a short upliftment value. What we are charged is the EMD that we have initially paid up is what we are supposed to forfeit. That is what typically happens because coal for them is coal. They sell it to somebody else. It's not as if they're not incurring any loss by me not uplifting. In fact, rather they would probably make a little more money. They sell it to somebody else at a higher price. So typically this is what happens in real life. Now, how much of this situation also we can take advantage of?
See
That
this
they are not
in this.
holding on to the quantity. They're selling it off. They're actually like suffering no loss. In fact, they're
See.
happy if you don't uplift because they can sell it at a higher price, premium to somebody else.
Okay. See, in this case study also, na, there was if this slide, if you can see this first point, it was dealing with a similar situation. But I agree if that we'll have to read the terms of the agreement clearly. What does that indicate? Like if it is resulting in a change in the value at
I
which the
think
coal will be supplied, then their position will be slightly different. I agree with that point with Mr. Vikram Bhai. But if it's
Correct. I also agree
purely
there. Huh? Yeah.
coming out of that you are not lifted, so if you don't lift, penalties are imposed. like in this particular case, so then we may take a recourse to this case. But if it results in a price variation that if you don't lift this much quantity, I will charge you at this rate and not at this rate. So then this proposition will not be applicable over there. I
Correct.
agree with that
Correct.
point.
Correct. So
Yeah,
thanks.
can I come in?
Yeah, thanks, Vikram.
Coming to
Yeah,
this
please.
point,
Yeah.
coming to this point, based on what the speaker has shared, it is more of a deterrent nature rather than
Yeah.
considering it as a differential consideration for short lifting. So
Correct.
when then it becomes a point of penalty. So penalty definitely this can be considered. This judgment is available to us, and we can also refer to that Mafatlal judgment of Supreme Court, Constitutional Bench, where based on that the recipient can always claim the refund. I think it's a
Yeah,
fit
yeah.
case to whether you can get the refund or not. We should, it being an exempted product and ITC is blocked, it is a fit case to apply for refund. And even if it is crossing the limitation, then also we can apply and test it. It will be a good case.
Yeah, I think
Secondly,
so.
Refund
I
में there
think
is
one
one more
thing
nothing to
point
was
was
lose, na.
that
Refund में there is nothing to lose.
Vikram
मिला
bhai.
तो it's a gold mine. तो
nothing to lose,
पैसे
and
के रख देने में कोई issue नहीं
we
होना
have a
चाहिए.
constitutional bench. We have a constitutional bench judgment of Mafatlal. But in that case, you have to prove that in the electricity costing which you have added, there is no scope of unjust enrichment. That you need to establish to the court. That will, I don't know whether that will be easy
For
or
me,
difficult
no, there
for
is.
the power
Yeah,
company to
there's
pass. Yes.
so that should not be difficult because हमारा pass through है ना arrangement जो भी coal
You
cost
have
लेनी है
to,
pass through. We have to pass through the variable cost of
It will
coal
depend on
in
the
any
tax
otherwise,
case.
facts.
then
It
you
will
are
depend. We'll have to that
then in that case
eligibility
you
to
are
get the.
hit by unjust enrichment.
I
Yeah,
agree.
so
I
they
agree.
won't
Refund
be
can go
unjust.
because Mafatlal judgment is very clear.
Uh,
Okay. So shall we
so
move
in
to
any
the
We
case,
are
next case?
passing it to the
yeah,
constitution. One more point is there. Can we take, in reference to this point, can we take this analogy to the where we are making deduction from the transporters for short recovery? Can it be treated as a consideration, a condition, not a consideration to of a tolerance to an act, where we have given some goods to the transporter for delivery, and there is a short delivery. In this case, we recover it from the transporter. In that situation, can it be considered as a consideration or a condition to a
You are
contract?
saying that
What should be
the goods which were given to the transporter, the cost of those goods which are lost or which has become short delivered, you are reducing that amount from the amount
recovered?
payable to the transporter charges. I
Payable, or we have
think
separately
we can draw this
because
over there
see
also.
value.
Okay.
No, reducing will not be the correct proposition because
Because that is not a
applicability
case.
valuation, the rate of freight freight charges, that is not a freight charges is separate. Rate is fixed, say 5 rupees or 10 rupees per kilometer, uh, 5 rupees per kilometer. So we are giving him that freight, and whatever we are recovering is for the shortage. So shortage we can exclude considering it to be a condition of contract. Can we do it like this?
Huh. I think there is a case. There is you can use this judgment in that situation also, but we'll have to be very examine all the facts properly. Then only we can we cannot just directly apply this.
Okay.
Examine the once we examine the
Okay.
facts, so then
can
only you will have to examine the facts and then apply that to them. Yeah, please.
so one was last because can we have the judgment? Just can you backslide so I can just take a photograph of it,
Okay.
audience. I'll take a screenshot. Of course, you'll be sharing the presentation, but in the meanwhile, I can try and put my team on it to see whether we can work on our data. I think the previous one, no? One more. Yes. Okay, sir.
Southern Eastern Coalfields.
Okay, sir. Thank you, sir.
Yeah. Okay. So shall I move to the next case law?
Sir.
Srikant, just before you move on to the next case law, I would also like to add one more point out here.
Yeah.
Maybe Amit bhai can actually even use the GST's definition of scope of supply, which is excluding the like schedule 2. You will only refer when there is classification required. So first you have to determine there has to be a supply, and then obviously
Correct.
as Vikram bhai also highlighted that if there are two consideration assigned to the contract, if you pick up this much quantity, then this is the consideration. If you pick up this much quantity, then the consideration changes. That will change the element. That is a supply consideration. But if it is in a
that is
kind of
supply.
a recovery, but if it is a recovery kind of a liquidated damages or a penal recovery which they are doing, then definitely you can make use of this judgment and also add this argument that first there is no supply only, and schedule
Supply
2
is
you
first place.
will refer only if there is a supply. So
Yeah,
you
yeah, I
cannot
agree with that. Directly create a charge from
And
schedule 2.
correct. Yeah, in any case, that will also make my case strong, because the coal is classified as 5% GST. So if you were to, and I had a contract breach in supply of coal, and they're charging me 18% GST on penalty. So the rate itself is a different chapter altogether. So they cannot be. I have not supplied coal in any case in that thing.
Yeah.
So I think
So
maybe
if
I'll
there is
go.
a different consideration, then they should have charged you 5% and not 18%.
Correct. So that will be my second argument.
That also is a good argument.
Yeah, exactly. So that's why thanks. This is good. Thank you all for this input. It will help us a
Move
lot.
to the next case law.
Yeah, thank you.
Now this is a case of target incentives, Kafila Hospitality and Travels Private Limited. Now this judgment is dealing with various aspects, but I have chosen to take out only one of the aspects which we can try to, which proposition I am trying to use. I think can be used in the GST regime also. So now let's see what are the facts of those cases. ITA agents are the persons who have been authorized to sell airline tickets directly from the airlines to the passengers or sub-agents. For sale of the tickets, ITA agents receive commission from the airlines. In addition to the said commission received for booking of the airline tickets, the airlines also incentivize ITA agents by paying target-based incentives, which are linked to the guaranteed booking of a minimum number of airline tickets. In certain cases, the sub-agents also book airline tickets through ITA agents. In a situation where the sub-agent achieves a predetermined target of bookings through a particular ITA agent, the ITA agent pays an incentives to the sub-agent. Now, issues is one. There was one of the issues. This is a larger bench tribunal decision. One of the issues which was referred to them was whether service tax can be levied on under the category of business auxiliary services on target-based incentives paid to the travel agents by the airlines by alleging that the travel agents are promoting and marketing the business of airlines. Now, what are the observations of the larger bench of the tribunal? The tribunal examined the scope of the incentives. For the tribunal first observed what is the nature of this incentive, and it's observed that incentives are generally given to encourage performance of a party. The factual position described above reveals that incentives have been paid by the airlines or CRS companies to travel agents when they achieve a predetermined target of sales. Then the court, by referring to section 67 of the Finance Act, observed as follows. Service tax is chargeable on a taxable service with reference to its value. Then such value shall, where the provision of services for a consideration in money, be the gross amount charged by the service provider for such services provided or to be provided by the service provider. It is therefore clear that only such amount is subject to service tax which represents consideration for provision of service, and any other amount which is not a consideration for provision of service cannot be subjected to service tax. Now here I may be going through this verbatim wordings of this decision, because there are some significant fact points which we can all notice when we just read line by line. It relied upon the tribunal, larger bench of the tribunal further relied upon the Supreme Court decision in the case of Union of India versus Intercontinental, and further observed that consideration which is taxable under section 67 of the Finance Act should be transaction specific. Incentives, on the other hand, are based on general performance of the service provider and are not related to any particular transaction of service. It needs to be noted that commission, on the other hand, is dependent on each booking and not on the target. If the airline travel agent does not achieve the predetermined target, the incentives will not be paid to the travel agents. It also took note of a Federal Court of Australia case in AP Group case, which is a federal Australian GST case. The larger bench of the tribunal took a reliance upon that case also. Now, the Federal Court of Australia had held that it was a case of a dealer incentive, like this automobile industries. There are dealers and the manufacturers of the automobiles pay incentives to the dealers. So, in that context, this decision was rendered regarding the levy of GST under the Australian GST, which of course this larger bench has relied upon to come to a levy or determine this applicability of target incentive under service tax regime. So, it will be interesting to note this case also. the Federal Court of Australia held that in order to levy the tax, the payment must be attributable to a particular supply and not to supplies in general. So the target incentives paid by a motor vehicle manufacturer to a dealer would not qualify as consideration, as the incentives would be in relation to all supplies and not in relation to a particular supply. There further, it Federal Court observed, that is Australian Court observed, the target incentives payment has no nexus within a particular supply. It is a payment made in connection with supplies generally. Perhaps more accurately, it is a payment made in connection with making of supplies generally. Then it observed the so-called suppliers of consideration identified by the Commission are nothing more than encouragement of an overall business relationship between the manufacturer and the dealer to the mutual benefit of both. That is, the incentives are being paid so as to encourage the overall business relationship between the manufacturer and the dealer. The overall relationship contemplates a continuing dialogue. That is what the associate argued, that the overall relationship contemplates a continuing dialogue between the wholesaler and the retailer in which promises are routinely exchanged. But to characterize this dialogue as involving supply after supply is unrealistic and impractical. So the court observed there, the Federal Court of Australia observed there, that there is a continuous dialogue that is taking place between the wholesaler and retailer. This dialogue is undertaken to foster, that is to improve the business of both the parties. But to characterize this dialogue as having a supply after supply is unrealistic and impractical. Further, to characterize the payment of the incentives intended to encourage this overall relationship to operate efficiently as involving supplies for consideration is equally unpersuasive. Then it further observed a fact that the dealer receives a payment, the highlighted portion I'm reading, the fact that the dealer receives a payment as an incentive when certain threshold associated with running the business in this way does not mean that the dealer is supplying a service to the manufacturer for a consideration. That is, when the incentives are being paid by the manufacturer to the dealer, that doesn't mean there is always a flow of consideration or a supply of service that is going from the dealer to the manufacturer. If the incentive payments were not available, there is no basis to infer that the dealer would have not have behaved in the same way for free. Now, this is very important observation, which says that had that manufacturer not given the incentive, then also the dealer would have done the business in the same way. There's nothing specific that he has done in addition to the what he was regularly supposed to do, for which you can say that the incentive is a consideration. So that is what he is saying. If the incentive payments were not available, there is no basis to infer that the dealer would not have behaved in the same way for free. That is, the dealer would have done the same activities which he is doing now for free. So that doesn't mean that that indicates that the incentives are not towards a consideration for any activity that is being done by this dealer. For the reasons, there cannot be said to be any supply for consideration in these arrangements. Now, based on this decision of the earlier decision, that is the decision of the Supreme Court in Intercontinental, and based on this Federal Court of Australia's case decision in the case of AP Group's case, the larger bench of the tribunal has held that the incentives paid for achieving target incentives cannot be termed as a consideration, and they are not leviable to service tax under the Section 67 of the Finance Act. So the target incentives which are received by these IATA agents in this particular case, which the department was alleging that they are being received by them from the airlines because they are promoting the business of the airlines. They are not in the nature of a consideration, because had these incentives not been there, then also the IATA agent would have done the same business how he was doing it. Merely because on achieving particular target, he is given a some amount as an incentive or a credit notice being given to him. So that doesn't mean that there is a supply of service that has been rendered by him to the airline for promoting his business. Now, this is going to be a similar situation will be there in arising under GST also. We may have to examine whether this proposition will be applicable, whether we can apply this or not. Though I'm not denying that there will not be any litigation. The courts will, the department will definitely be not accepting these decisions. But what are the propositions that are coming out, which I feel would be relevant under the GST is, only such amount can be subjected to GST which represents consideration for making of a supply, and any other amount which is not a consideration for making of a supply cannot be subjected to GST. That is, the amount has to be in the nature of a consideration. That is the first point. In order to levy the tax, the payment must be attributed to a particular supply and not to supplies in general. Then, even in the event if the incentive payment were not available, the dealer would not have behaved in the same way for free. That is what I was trying to explain. If in absence of the incentive also, the dealer would have done the same activity. There is nothing different or a new activity which is being done by him. So that indicates that the payments are not linked to that any activity from the dealer side. The fact that the dealer receives a payment as an incentive when certain threshold associated with running the business in this way does not mean that the dealer is supplying service to the manufacturer for consideration. So there is a reasonable case, what I believe, in such a similar situation, one may be able to take a stand to that GST will not be applicable on target incentives. Now, go as a practically what industry people are doing is many people are saying, so long as the other person is getting a credit, why we break our head not trying to charge GST and then litigate with the department and all those things. That is also a prior view I also entertain. So long as the credit is available, one can go ahead because that will not affect the business much. But in case one has received some amounts, but unfortunately no GST has been charged or he didn't notice to charge, he just went on receiving these credit notes, went on adjusting it. He's being pushed to the wall by the department. By now it is liable for GST. Then one may consider taking recourse to these decisions, which may, I think, even hold good under the GST law regime also. So anybody would like to comment on this? Anybody having a different view on this?
Yeah, I would like to add something over here. I fully agree to what you have concluded with respect to that decision in GST. So I am in sync with the judgment and what you have analyzed. But the only thing that should be kept in mind is that this judgment is pertaining to the tax period prior to negative list. That was when the positive era was there of service tax.
I agree that.
So what happened na, at that point of time, specific services were defined, business
Category
auxiliary
was there.
services, air travel agent services and all that. So
I agree.
looking from that perspective, looking from that definition perspective, section 65105 and all that, the larger bench has taken this decision that it will not be considered as a service liable to service tax. But during the course of that judgment, they have given, as you have also highlighted various pointers, they have given out these various ratios which we can apply definitely. So
Only
this
the
was just
ratios.
I wanted to put there. It was an error.
I agree with this point. It has to be kept in mind that this was in that period of time. But this certain points which the court has observed, we may try to apply it when we are required in this. When we are situation comes like we have been pushed to pay tax and all those things, we may try to use that. That is all. That in the as particularly in the aspect of whether it is a consideration or not, to establish that aspects, we can rely upon this judgment.
Srikant,
So
whether the manner in which the incentive is given will make any difference. One way is by giving credit notes where you may not charge the tax. Another way is by actually making a payment of the amount which the other person will show it as incentive line, in the profit and loss account credit side. Whether the manner in which it is given will affect, especially in the GST regime. In view also of the fact that in GST you have to correlate the credit notes. Of course, previously there was 1-to-1. Subsequently, they changed to passing it in one, etc.
But it should, ideally speaking, if I because that giving of a payment in money and issuance of a credit note should not make any difference actually. But there are practical challenges. We have seen some sectors where there are people who are not they are going on issuing credit notes, but they are not able to. They are not ready to. They are not willing actually. It's not that they are not able to. The big manufacturers they're not willing to change that because they don't want that reduction in output tax liability. They don't want to give effect in GST and all those things. That practical challenges are there. I agree with that. But I don't think there should be any difference if that manner of which the incentive is given, whether by a credit note or by a cash payment, should make a difference. This proposition should hold good in both the scenarios. That is what my personal views on this case law.
Okay, so whether the ITC will be affected, because to the extent of the incentive received, you will not pay the value of the purchases which you have made from him because of this incentive. Normally it happens that way.
Yeah. But I think there was that board circular also took the view that to that extent the credit note is issued that secondary discount ka circular, it takes the view that that will not affect the ITC of the recipient, because to that extent tax is not reversed by the output supplier and there is no reversal by the buyer, so it should not be affecting the ITC of the buyer, because he's also not, that fellow is also not claiming a reduction in his output tax liability, na? So
Yes. Yes.
in that you should not be making an ITC, should not be affected. Only to the extent of value that has been paid, okay. But I think that the circular, if I'm not mistaken, has also taken a stand that value has not been paid, so ITC to that extent has to be reversed. That condition is also, they say, will be satisfied in that situation.
They have considered it as a financial credit note. So financial credit notes will not impact any ITC reversal in
ITC
that
of the
sense.
buyer, yeah,
ITC to the buyer will not be effect.
yeah. So now we go to the next case law. Okay. Only one point I want to know: up to what time I have to? We have time up to 7, na?
Yes.
Hello.
Yes,
Yeah.
yes, up to
So
7.
okay, because I have still more 6 case laws, so we have only around 35 minutes more. I will try to
So,
take as much as possible so that we can finish it.
yeah,
Okay, so I
yeah.
go to the next case law. Now this is a case law of secondment of employees. Now it's a Nissin Break India Limited. Now, this is a case where the appellant had entered into an agreement with the foreign party, whereby foreign parties were required to send or depute their employees in India to provide guidance and assistance to the Indian entity for doing his business. Now, during the course of this, under that agreement, it was clearly mentioned that the employees who would be deputed from abroad would be considered as employees of the Indian companies, working as an employee of the Indian company. The payments were being made by Indian company. In this particular case law, it was being made to the for foreign company for towards, because the foreign company used to make some payments to the employees abroad, and for that extent, to that extent, they used to raise a debit note on the Indian company. So the department took the view that the payments which are being made by Indian company to the foreign company should be in the nature of a service of a supply of manpower, because this is a pre-negative list regime scenario. But I think this proper cases will come up in GST also. The issue was whether the payment made by the appellant to its parent company towards the salary and other perks of the employees deputed by the foreign parent company with the appellant in India would be liable for service tax under reverse charge mechanism. The tribunal observed that on the perusal of the agreement entered between the parties, the appellant and his parent company, we find that the employees deputed by the latter are working under the control and direction and supervision of the appellant. The appellant has also deducted tax at source from the salary and other perks given to the employees. That is the income tax. They have also deducted income tax. This fact is also not under dispute that the appellant did not pay any direct or indirect consideration to its parent company towards the deployment of the employees. That is, whatever amount was paid was towards the salary of the employees. There was no other consideration that was paid to the foreign company for deputing their employees. Thus, it cannot be said that there is any agency and client relation between the parent and the client appellant. Rather, the terms of the manpower terms of the agreement makes the position clear that the relationship between the appellant and the manpower deployed by the parent company is of an employer and employee. As such, it cannot be considered as a taxable service under the category of manpower recruitment or supply agency service. Now, in this case, it has relied upon another case of a Volkswagen. In that case, it was a German company who had deputed employees. In that case, the German company was paying 75% of the employees to that employees' family in Germany. And to that extent, they were raising a debit note. These people were remitting that. So they said the manner of this payment will not make any difference. The method of disbursement of salary cannot determine the nature of the transaction. They were the tribunal in this case held that the employees, though they belong to the German company and they are deputed in India, but when they are working in India, they are under the control and supervision of the Indian company. So in this case, the court held the payments will not take the character of any service. Payment will not be falling under the category of manpower recruitment supply agency service. And this decision of this Nissin Brakes has been upheld by the Supreme Court. That is, the civil appeal has been dismissed. So this becomes a very important case law on the point that even this the GST scenario also, if the foreign persons are employing some deputing the employees, we may say that there is no service that is being provided that we are complying with this terms and this employee relationship is clearly evident from this our agreement. That agreement with the party should clearly demonstrate that the employees will be deputed from abroad, will be working as an employee, and there is an employer-employee relationship that will be established between the Indian company and the deputed employees. So in that scenario, one may be able to argue that there is an employer-employee relationship, and there is no service that is being provided by the foreign entity, so it should not be leviable to tax. This is my personal view. I'm still not very clear whether this will hold under the GST regime, but I feel there is a case to argue based on this decision. So anybody would like to comment on this?
This is pre-negative list.
This pre-negative list. This pre-negative list. I feel this can be. We can draw an analogy from this case law that can be used in GST regime, but we'll have to test it. It's not directly, but I felt since this is a decision which has been upheld by the Supreme Court, I felt there will be some significance to under GST also, because the employer-employee relationship has been separately put in Schedule 3. So in that context, I just highlighted this.
Yeah, but
So,
Srikant, that the amount employer-employee relationship, there is no doubt. But the fact is that amount which the Indian company is paying to the parent company, that is not in respect of the employer-employee relationship. It is in respect of reimbursement, so to say. And when you say it is the reimbursement, pure agent or whatever you may call it, and whether this will qualify as a pure agent or whether the valuation rule section 15 will come in.
Yeah. I think, yeah, that pure agent see, because if they to say that this is a pure agent, there is nothing, because in pure to when a pure agent comes in a situation when there is a consideration, and in addition to the consideration, there is something which is taken as a reimbursement. Now, if they are just deputing their employees and you are only making a remittance, whether we can take it as a reimbursement, pure agent conditions will be satisfied. I have slight challenge will be there. I agree with that point. This will not be directly applicable, but I took it as a point of to highlight this.
Okay, sir. Okay.
Yeah. Now, this is a Vantage International Management Company. Now, this is a case of a free supply. That is that the SSC had applied was performing drilling in the ONGC wells, and the ONGC had agreed that we will be providing diesel which is required by that drilling equipments that will be provided by ONGC to the appellant, and ONGC need not the appellant need not supply that will not be that will be separately given to them. That was what agreed upon the terms. The course of the audit, the department pointed out that ONGC has provided diesel to the appellant during the disputed period and opined that the cost of fuel should form part of the gross amount under section 67 for payment of service tax. Now, the issue is whether the value of material supplied free by the recipient to the supplier would be included in the value of taxable service. The observations of the tribunal were as follows. First, it observed that the agreement and it came to a held that the recipient of service was required to supply fuel for running of the drilling equipments, and that it was not required to make payment of fuel to the appellant, and that the same was in fact supplied free of cost to the accomplish the assigned task. This aspect was not disputed. That is, the department had not disputed this factual aspect of the case. Then it relied upon the Supreme Court case in Bhayana Builders and came to a conclusion. Any amount charged which has no nexus with the taxable service and is not a consideration for service provided does not become part of the value which is taxable under section 67. The cost of supply of goods provided by the service recipient to the service provider is neither an amount charged by the service provider nor can it be regarded as a consideration for the service provided by the service provider. In fact, it has no nexus whatsoever to taxable service for which the value is sought to be determined. Then it observed plain meaning of the gross amount charged by the service provider for such service provided or to be provided would lead to the obvious conclusion that value of the goods or materials that is provided by the service recipient free of charge is not to be included by allowing the gross amount, simply because of the reason that no price is charged by the SSC or service provider from the service recipient in respect of such amount goods or material. That is, that value that a recipient if is supplying certain goods or materials to the service provider, merely because there is nothing charged, you cannot include that whatever is being supplied as a consideration for the services provided by the service provider. This further gets strengthened from the words for such service provider or to be provided by the service provider or SSC. Obviously, in respect of the goods or materials supplied by the service recipient, no service is provided by the service provider. That is, whatever is given is for the purpose of performing of the contract, and there is nothing that is separately being done by the service provider in consideration for getting that materials or goods or services. So, the value of such free supplies cannot be included in the value of taxable service. Now, this proposition which coming out from these judgments are amount charged should have a nexus with the taxable supply and should be in the nature of a consideration for a supply. That is that in this particular facts of this case that diesel cannot be considered to be a consideration because it is not charged by the service provider and there is no nexus, that is that nothing has been done by the service provider for getting that thing. The cost of free supply of goods or services by the recipient to the supplier is neither an amount forming part of the price charged by the supplier, nor can it be regarded as a consideration for the supply made by the supplier. Value of the goods and materials that is provided by the recipient free of charge is not to be included in the value simply because of the reason that no price is charged by the supplier from the recipient in respect of such goods or materials, and also because in substance no service is being provided by the supplier in lieu of the goods or materials supplied by the recipient. So what I draw from this case law is that merely because the recipient has provided some items for us to enable, it is agreed upon in the agreement that the recipient will provide so and so items to the service provider to enable him to provide the service. You cannot, there is no, there will be nothing that is mentioned as that amount is charged by that service provider, service provider. So you cannot consider this as a consideration for the supply made by the service provider to the service recipient. So this proposition is what I felt will be useful under the GST regime also, because in GST regime also there will be cases where recipient under the agreement recipient is supposed to provide something to the service provider. So in that scenario we can say that cannot be included in the value of the supply made by the supplier to the service recipient, because there is nothing specifically being done. That is a condition of a contract that the recipient has to provide that items to the supplier so as to enable him to provide that service, and that items which is being provided cannot be considered as something which is received by the supplier in consideration for making of the supply. So this is the proposition which I felt would be relevant under the GST. So anybody would have to like to comment on it?
Yeah, I think the circular covers this point. No? The GST circular is there on molds and all those for free supplies.
Yeah.
Clarification from this point was clarified that of free cost banner builders relying on banner builders, it was clarified this point. So already, I don't think there will be any open issues in this.
But anyway, this is the case law that I heard if at all. No, there can be a possibility. There can be issues that can be raised by the department based on some case to case, based on an agreement. Each agreement may, there are some amounts which are going here provided by the supplier, some amounts are to be provided by the service recipient.
So the circular was very clear.
That scenario you can use this judgment.
Yes.
I agree with that.
But this is saying where it was, it covers this judgment basically.
Okay. I agree with that, no issue. But generally, in situations where the department is trying to build up a case like this, that scenario one can make a use of this judgment. Shall I move ahead?
Yes, Srikant.
Yeah. Now, this is a particular case of Gamma India Limited. This is actually not that significant, but I felt I might bring it to the notice of all the people that if it is facing such issues, may try to make use of it. The appellant had received a mobilization advance during the period 8/9 to 11/12. the appellant had explained, that is the appellant's say was that the mobilization advance in construction contracts is received well before the commencement of the contracted work, and being a procurement and being for procurement of essential equipments and labor as a prelude to performance of the contract, the responsibility solely of the appellant. It is a surrogate financial accommodation. That is what it was like in case of this construction contract. The contractor is generally given a mobilization advance much before the entire work is commenced, so that he can organize all those materials, labors, and equipments. Generally, the terms provides that a mobilization advance will be interest rate will be charged. Interest is prescribed that interest will be applicable on this mobilization advance. And practically, what happens is after the whole work is done, that's as and when the payments are bill of quantities is certified, payments are being made in installment basis. At that time, portions of these amounts are being utilized as adjusted against the consideration as what that has been billed. Now the whole issue in this case is the SSE had paid the tax somewhere around in entire supply of contract was completed by in 2015, and this mobilization advances received prior during this period 8, 9 to 11, 12. The department had sought to raise a demand saying that this amounts ultimately, this mobilization advance which the contractor received was ultimately utilized for discharging the towards the consideration that was payable by to the contractor. So it was in the nature of an advance, and since the SSE has paid the tax, there is a contractor had paid the tax only in 2015 when the adjustment had taken place. That is not correct. He ought to have paid the tax in 2008, 9 to 11, 12 period. That is when each time when he received this mobilization advance, at that time it ought to have paid the tax as an advance received towards the provision of construction services. So that was the issue which was before this tribunal. So whether the appellant is liable to pay service tax at the time of receipt of mobilization advance and not at the time of adjustment of such mobilization advance against the consideration receivable by it under the contract for provision of construction services. That was the issue. Now this tribunal observed that post this introduction of point of taxation rules, there is no doubt that the advances attract levy of service tax. But then some observations of this tribunals are very significant, like this second bullet point. Under the Finance Act, the charging provision controls section 67 of the Finance Act. Consequently, gross amount therein is not entirety of the receipt, but is only as is relatable to the services rendered. A monetary transaction between two persons does not purport to be a taxable service alone, and to the extent of attribution to a service that is not taxable is not liable for inclusion in the computation of tax liability. That is, every monetary transaction between two persons need not be considered to be for a supply of service or something like that. And to that extent it is not relatable to the service, it will not be included in the value of in the computation of the tax liability. Then it further observed that under the contracts, payments are usually made in stages, that is for payment of 90% contracted amount. Every time the payment is to be made, the agreement will provide 90% of it will be paid and 10% will be a retention amount, and all those things is provided. Then it further observes the mobilization advance is adjusted against the final payment due and is not linked to the work, but as a pledge of the contract between the appellant and the principal. It is also subject to furnishing of a prescribed bank guarantee. There is no connection with the performance of the contract. It is not in dispute that the mobilization advance carrying interest granted to enable the contractor to prepare for undertaking the contracted work. The subsequent adjustment with the final payment does not suffice to construe this as an advance payment for the work to be done, merely because the recipient and the payee happened to be the provider of the service. That is, merely because the advance, this mobilization advance was paid by the service recipient to the service provider, and ultimately it will get adjusted in against the bill which is raised by the service provider on the service recipient, does not mean that it becomes it has a character of an advance. But this point to be noted is that this advance, mobilization advance here in this case, was carrying an interest, and it was also supported by a bank guarantee to substantiate that it was a completely distinct transaction. That is how the court tribunals analyzed this particular case. It observes the payment of the mobilization advance is but a separate financial transaction within the contract of providing a service, and within the law laid down by the Supreme Court in so and so is not permitted to be included in the gross amount. So the tribunal observed that even though it is provided within the same contract document, which is provided in the provision of construction services by the service recipient to the service provider to the service recipient, But since this this is a separate transaction, because it is there is a separate interest for that, which has been agreed that mobilization advance will be carrying an interest, and there is also a separate bank guarantee given to substantiate that that in the event it is not happening, then the bank guarantee will be encashed. So this itself indicated that there were two distinct transactions, though they were recorded under the same contractual document. So what I infer from this case law is a monetary transaction between a supplier and a recipient is not always for a taxable supply alone. Payments made to the extent it is not attributable to supply is not liable for inclusion in the computation of tax liability. Every monetary transaction between the service recipient and the service provider need not always be having the character of a consideration. A mobilization advance is adjusted against the final payment due and is not linked to the work but as a pledge of the contract within the appellant and the principal. It is subject to furnishing of the prescribed bank guarantee and there is no connection from the contract. Mere subsequent adjustment of the mobilization advance with the final payment does not suffice to constitute it as an advance payment for the work to be done merely because the recipient and the payee happen to be the provider of the service. They are separate financial transactions within the contract for providing a service. So merely because they are money has been paid by the service recipient to the service provider, though it is in the and ultimately it will be adjusted against the consideration which is payable by the service recipient to the service provider. But by the time when the payment is made, it is having a different character of a mobilization advance, which is completely different and distinct and unlinked with the rendition of the service. One cannot, the department is not correct in asking for a payment, treating it as an advance towards the provision of service and asking to pay the tax at the earlier date. The department in this case is trying to ask for an interest. There is a delay in payment of tax. I thought to have paid in 2008-9. It has been paid in 2015. So there is a delay. So the interest is not, you cannot treat it as an interest is not payable. That was the conclusion of this tribunal decision. So this is if similar situations are arising under the GST also, say mobilization advance are there and ultimately it is getting reflected. So in that scenario also, one may take a recourse to this decision. Even in cases I feel like there are intergroup company transactions like loans are lying with some other entities or something like that, which ultimately is squared off by raising of a taxable supply invoice and all those things. One may be able to draw an analogy. I am not saying this will be squarely applicable. One may be able to draw an analogy. This proposition will hold good in those cases also, where that loans are adjusted against the supplies made among the parties themselves. So in that situation, one may argue that it is not an advance. Money is received only when it is squared off. No liability time of supply does not arise at the priority. It arises only after the adjustment of such advances. So this is what I was trying to highlight from this case. So anybody would like to comment upon this particular case?
Yes, can I come in?
Yeah, please sir, go ahead.
Hello. Yeah,
Yeah,
yeah.
please sir,
Actually,
go ahead.
we are seeing we are seeing that the work contractors there is a mixed practice and issues a receipt voucher for the advance payment and they charge GST, whereas others treat it as a loan. Uh, why this is so is because there is a greater challenge under the GST because services has been defined other than goods. So monetary
Huh.
transactions, whether it will fall under
Hmm.
service or not, is another hurdle which needs to be passed under the GST. Because the way the services have been defined under the GST law, definitely it
Hmm.
creates a confusion whether it is a pure monetary transaction, consideration, transaction, or a supplier services. So that will be a greater hurdle. Second issue is that where suppose a contractor is treating it as an advance and the interest
Huh.
is also being charged. Now, what should
Huh.
be the treatment of interest? Because as a contractee, he is treating in his books as an advance, as a loan, and definitely on interest the GST is not applicable. But how this work contractor will treat the payment of interest, which he is supposed to pay on those mobilization advance when he is treating it as an advance
No, no,
against supply.
so far as the person who is giving the contract, that is the recipient, is concerned, he will not be liable to treat it as he'll be treating as exempt supply under the GST. Na? He'll not be liable to pay any GST in the interest portion.
But if you see, if the contractor treats it as an advance
हाँ
against supply, then this interest portion will also be added as a part of supply. No, no.
हाँ तो you are asking it from the perspective of the contractee or the contractor? See, I agree with your point that the interest will be forming part, but the contractor in your case is treating it as an advance and is issuing a GST invoice, and at the same time also issuing you said a receipt voucher and also charging GST, correct? Hello.
I think we've lost him. You can proceed.
Okay, fine, no issue. So I'll consider the time. I'll move ahead. Now these are certain small cases which I have taken, which I felt ki thoda would be relevant. This is a logics infrastructure case. The appellant in the said case was a provider of residential complex service. It has received various charges such as preferred location charges, external development charges, and etc. from the buyers to whom it had sold flats in the residential complex. The appellant had discharged service tax liability in respect of these charges after claiming abatement of 75%. Revenue contended that this abatement of 75% will not be available in case of these preferred location charges and external development charges. In respect of these charges, the department has the view that they are required to pay full tax, full rate of service tax on the full value. There is no abatement would be available. The appellant challenged this before the tribunal. The tribunal relied upon the provisions of this bundled service, which was introduced there in the 66F of the negative list regime, and to the conclusion that there are various elements of services that when they are bundled together and shall be treated as provision of single service, which gives the bundle its essential characters. Charges collected by the appellant, such as external development charges, preferred location charges, do not have independent existence, and they are associated with the provision of residential complex service, and therefore essentially they are various elements of service which is predominant, and therefore essentially they are various elements of the service which is predominant for residential complex service, and they are therefore cannot be vivisected and cannot be treated as separate. Contract with the customer is for complete amount, and there is no separate contract with the client for base value and separate contract for other charges like external development charges, etc. Accordingly, the tribunal held that preferred charges and external development charges, etc., will be also be liable for the benefit of abatement. Now, even under this GST regime, we are paying this construction service by taking 1/3 deduction under the rate notification. So, if we apply this principle of this composite supply, and wherein the principal supply will be the supply of residential complex service, this one may be able to argue by in case of these charges also they will be charging by claiming that 1/3 deduction in respect of that same rate which is applicable for the residential complex service. Though I have not come across any such practical challenge as of now under the GST, but I felt it may be relevant for the under the GST regime also, because this proposition of bundled service under 66F is more or less similar to this composite supply and mixed supply under the GST regime. So that was a small. I felt I should be taking such case, similar this case law also. Anybody would comment? Like to comment, or shall I move ahead? I think I will go ahead. Yeah. This is the next case law. Sorry. VME Business Solutions Private Limited. It is a case law regarding revenue neutrality. This is also a small case law, but I thought it will be of interest to some persons, so I thought I should bring it to this notice. The appellant in this case had received foreign services from foreign-based companies under the category of consulting engineering services. Under the category of consulting engineering services, the revenue had confirmed the service tax demand on the grounds that the appellant was liable to pay service tax on these services under reverse charge basis. On first appeal, the appellate authority observed that the respondent was required to pay the service tax on reverse charge mechanism. The tax paid by him was immediately available to the converter, which he could have used for payment of tax on the output services. he accordingly observed that the entire situation is revenue neutral. There is no loss of revenue. Based on that, he had dropped the demands. So the revenue had appealed against the order of the Commissioner of Appeals on the ground that it was statutory requirement of the SEC to first. Hello, am I audible?
Yes, you are audible.
Yeah, okay. I thought I was lost in nothing like that. No? Okay. So in this case, the revenue was taking the view that the appellant would be entitled to take the credit only after it has paid the service tax, and since it had not paid the service tax, they were not in a position to avail send back credit, and as such, the dropping of the demands merely on the basis of revenue neutrality was not correct. There was a stand of the department. Now, the tribunal in this case observed that, so admittedly, the service tax was required to be paid by the SEC was available to them as credit, and the appellant was also providing output services which were also taxable. During the period in question, they paid service tax on output services by way of cash. Had they paid the service tax on the input services received by them, they could have taken the credit and utilized the credit for payment of duty instead of paying service tax in cash. The apparent authority has gone by the figures of the cash payment of tax, and by comparing the same with their liability to pay tax, come to the of revenue neutrality. Then it also observed that the Jet Airways case was squarely applicable in such situations, and the Jet Airways case has already been upheld by the Supreme Court. So, in case it was revenue neutral situations, the longer period of limitation would not be applicable. That was the what is trying to be relied upon by this decision. So in my view, this proposition would be applicable even under the GST regime in cases where the registered.
We lost you.
Issues of
We cannot hear. We lost this last slide. We cannot hear it.
okay, sorry. This slide, I was on this slide when I was lost.
Yeah, this particular slide, 54.
Okay, 54. Okay. So what I was thinking that this proposition which I was thinking is that can be derived from this case law is in cases where there is a revenue neutral situation, that is where the SEC, if he pays the tax and a reverse charge basis and he is entitled to take the credit, what this Jet Airways case law is saying is ki, in such cases of where there is revenue neutrality position, extended period cannot be invoked. Now, I do understand that under the GST regime, this proposition may not fly that as how it had flown in the service tax regime, but one may try to take recourse if a situation arises that in such argument. There is a civil appeal of Jet Airways which has already been dismissed by the Supreme Court. So it will be a binding precedent that in cases of revenue neutrality, extended period cannot be invoked. In cases like RCM where we are supposed to pay tax like lawyers fees or in import or services where it has been left out, and if the department is invoking extended period, one may take an argument, but we'll have to test it in the court under the GST regime. So that is what I felt, but I felt I should bring this to notice because it might be of some interest to some participants. So shall I go ahead on the next case law?
Yes, please. Yeah.
Yeah. Okay. Now, this is the case of Modern Business Solutions. It is a case which is dealing with reimbursement. Now, I'll just try to quickly summarize the facts over here. The SSC was engaging in managing the business, and for that, he was paid a management fee. In addition to that, the terms of the agreement he had agreed that there will be the recipient would be also be reimbursing him the cost of his office and the salaries and the employee salaries and all those things which he has incurred. All those things will be reimbursed to him by the service recipient. He had treated it as a reimbursements falling under the valuation, and by taking recourse to Rule 5.2 of the valuation rules, he had tried to exclude it from the value of service and pay service tax only on the management fee which he was getting. The department had sought to include the reimbursement in the value of taxable supply. Now, though this decision has relied upon the earlier decisions in case of Bhayana builders and all those things, but some observations of these decisions were significant, so I thought I should take it. It is apparent that the appellants were engaged in providing business auxiliary services where the remuneration was based on actual expenses by adding a percentage of margin over certain expenses. That does not convert the expenses into reimbursement. In the terms of the decision of Honorable Apex Court in Intercontinental Consultants, reimbursement cannot be included in the assessable value. So the tribunal observed that in view of the Intercontinental Consultants case, reimbursement cannot be included in the value of the assessable value of the service. However, what constitutes reimbursement has to be determined in the light of the decision of the larger bench in case of Bhagwati Traders, wherein the larger bench observed as follows. So I am just reading the significant highlighted portions, which says the concept of reimbursement will arise only when the person actually paying was under no obligation to pay the amount and he pays the amount on behalf of the buyer of the goods and recovers the said amount from the buyer of the goods. So what the tribunal in the Bhagwati Traders has illustrated is, if suppose a manufacturer is there and the buyer of the goods, he himself brings or negotiates with the suppliers for raw materials and only asks the manufacturer to collect it from the suppliers, make the payment to the suppliers, and then get the cost of the raw materials reimbursement. So in that cases, that will be treated as a reimbursement because the manufacturer is under no obligation to pay the amount to the suppliers of those raw materials. Similarly, in the case of service recipient, the larger lays down this ratio is only when the service recipient has an obligation, legal or contractual, to pay an amount to any third party, and the said amount is paid by the service provider on behalf of the service recipient, the question of reimbursing the expenses incurred on behalf of the recipient shall arise. So it further lists, for example, when a rent of premises sought to be claimed as reimbursement, it has to be seen whether the agreement between the landlord and the landlord of the premise and the service recipient, the service recipient is under an obligation to for paying of the rent to the landlord, and that the service provider has paid the said amount on behalf of the service recipient. So we'll have to look at the agreement whether it is whose obligation to pay, whether it is the service provider's obligation or the recipient's obligation. Similarly, is the case for reimbursement of salary. Who is the employer of that employees? Who is supposed to pay the salary to those employees? Then it also observed the instant case, the rent cost of and the cost of manpower is not a reimbursable expense but a cost of service. That is, these items are a cost of service which are incurred by the service provider so as to provide the service to the recipient. So just by the terms of the contract, an SSC cannot convert a cost into a reimbursable expense. Then it relies upon some cost accounting standards issued by the institute, and it says ki all costs have to be an associated expense, not need to be factored in. Then it raises a question. Now the question arises if all the expenses can be converted to a reimbursable expense by way of a contract, or are there expenses which are so integral to the activities of the service provider that they cannot perform without incurring these expenses. So we have to first analyze whether these expenses are really in the nature of a reimbursable expenses, or are these are expenses which are so integral to the activities of the service provider that without those expenses the service cannot be performed by the service provider. To solve this issue, it comes into the travelers. Here the distinction between the so-called reimbursable expenses and free supplies becomes relevant. Now the tribunal has taken a recourse to free supply to find out what is the reimbursable expenses ka nature. A free supply changes the nature of a contract. For example, this is very important example which they have given. A contract for painting of a building would become a labor contract if the paint and painting equipment is supplied free. However, a painting contract will remain a painting contract even if the agreement has a clause where the actual cost of paint and equipment is reimbursed. All expenses incurred by a service provider cannot be called reimbursable expenses. Only the expenses that qualify the test laid down by Bhagwati Traders can be called as reimbursable expenses. So what is the test that was laid down in the Bhagwati Traders case is the person actually paying, the concept of when he is under no obligation to make that payment, but he pays the amount on the behalf of the buyer or the recipient and recovers this amount, then only that amount can be considered as a concept of reimbursement. So the logic which they are trying to say is you have to first examine who is actually obligated to make that incur their expenses. Now, in this case, the office and the rent and the employee's salary were considered to be in the nature of a reimbursement. That is what the SSE was trying to argue. They said this is the SSE's office and it is the SSE's employee, and without these expenses, the SSE cannot provide a service to the service provider. So basically, it doesn't appear that it is SSE is not obligated to pay for these things. SSE was very well obligated to pay for these expenses, and hence this cannot be considered in the reimbursement. Only if it was a case where the service provider was supposed to provide these things, and the service recipient was to only make use of these things, but provide the service. But because of some expediency of the business, it was the service recipient who, the service provider who paid for that. Then only it can be termed as a reimbursement. Otherwise, it should not be considered as a reimbursement. So, just by the terms of the contract, the SSE cannot convert its cost of provision of service into a reimbursable expenses. So, this is an important proposition that we cannot just mention in our agreements that this had to give a reimbursed to you. So that doesn't make it as a reimbursement for the purpose of exclusion from the value of supply. We'll have to apply the same test whether who is obligated to really incur their expenses. If the recipient was obligated under the contract to provide certain items to the supplier, so as to enable him to make the supply, but the supplier procures the same and then recovers the cost of such procurement from the recipient, then it would be characterized as a reimbursement. Otherwise, in my view, this one may not be able to characterize this as a reimbursement. Under the GST also, this pure agent concept is there still carried on. So these propositions will still hold good, I felt. Anybody would like to add anything or comment upon any point on this case law? So shall I go ahead?
Yes.
Okay, okay, fine. Now coming to the last case law which I have taken today, I have slightly exceeded, but this is a very interesting case law. Some observations are also relevant. This is the case of Delta X Enterprises. It is a case where, I'll just quickly summarize. It was a case where the SSE was paying service tax on the services that were rendered by it. It was also filing its service tax returns regularly, but for it was not maintaining its books of accounts properly for the and for the purpose of income tax, it was taking recourse to this section 44 AD, whereby it was declaring income on a lump sum presumptive basis, which was reflected in its income tax returns. Now, the service tax department took up these income tax returns, compared it with the service tax returns filed by the SEC. Definitely, there was a difference in the figure because what has been filed in the income tax was on a presumptive basis. So it raised a demand for the differential amount on the service tax amount, service tax demand on the SEC. Now the department had taken recourse to this best judgment assessment under section 72, wherein if the SEC is not maintaining proper books, so officer can, based on his best judgment assessment, create demand on the SEC. Now the observations of this tribunal decisions as significant. Now the tribunal observations are: admittedly, the appellant did not maintain detailed accounts for all the transactions undertaken by them. They have availed the provisions of section 64 AD of the income tax of filing the returns. This formed the basis for service tax demand, as income shown is much higher than that declared consideration for taxable service. We note that the appellants categorically asserted that they did not provide other service other than those details of which have been submitted to the lower authorities. That is, whatever the services they had provided, they had disclosed it in their service tax returns, and they had also provided contracts of copies of all these contracts to the assessing central excise officer. The revenue also could not point out excess receipts on these contracts or the taxable service which gave them the consideration escaping the tax. That is, the department is also not able to point out in this particular case that there is a income which is shown in the income tax return, but the department is not able to point out from which contract this income has arisen. So these observations are very significant. Now please note these observations which are highlighted. In the absence of a specific allegation with reference to the nature of service or the service recipient, it is not tenable to hold an income of the appellant, even if it is admitted to be an actual income, as consideration for a taxable service. That's very important. Even if the SEC has admitted that it is an actual income, but if the nature of service or who is the recipient is not able to be determined, the department is not able to determine, they cannot just say that you have to pay service tax on that. You cannot consider it as a taxable service. The minimum requirement to tax an assessee for service tax is to identify the nature of their taxable service along with the recipient of such service. No service tax liability can be fastened on the unidentified service for unidentified service recipient. This is very important. For a levy, there has to be a service which has to be identified. What is the service that has been rendered? And there has to be a service recipient who also needs to be identified. Without identifying the service, who is the service recipient or what is the nature of the service, merely because there is an income that has been reflected in income tax return, or nowadays they are looking at the 2 years 26A statements and saying there is a 94J professional fees that is deducted. So there is some service that has been rendered. So please pay service tax on that. All those kinds of things will not be permissible. There is no such provision for the summary assumption even under Section 72 of the Finance Act 1994. The appellants in this present case did file the section returns under Section 70 and also made available the contracts on which service tax liability will arise. As such, we find the application of Section 72 cannot be extended solely based on the income tax return without identifying the specific taxable service or service recipient. So, what I summarize from these judgments is the minimum requirement to tax an assessee, even under the GST law, is to one has to identify the nature of the taxable supply along with the recipient of such supply. That is very important because we need to know just because there is a difference between an income tax return and our 26A statement, we should not be subjected to GST. We will have to identify, the department is bound to required to identify who is the service recipient and what is the nature of the supply that has been rendered. No GST liability can be fastened on an unidentified supply for unidentified recipient. That's very important. The service as well as the recipient both needs to be identified. So in cases where the assessee has filed all the returns and made available all the contracts on which tax liability will arise, raising of demands merely based on the figure shown in income tax return by assuming it to be in the nature of a consideration for provision of supply is incorrect. So we have to merely because there is a difference between the income of the income tax return, income tax return 26A statement and what has been filed by us in our GSTR1. There should not be any department cannot raise a demand. They will have to crystallize what is the service or supply that has been made. Definitely they will ask the assessee only to reconcile what is the difference. We may have to reconcile, but purely basis on the figures which is reflected, they cannot create a demand upon the assessee. They may call for reconciliations. We may have to supply those reconciliations, but unless and until the service nature of service is identified or the and who is the recipient of the service is identified, demand cannot be crystallized. That is what is the proposition which is I'm trying to draw from this case law. So with this, I have finished all my case laws. Anybody would like to comment or add anything on this particular case law, or in generally on any other case law which I have taken?
Yeah, I would like to ask one question for this particular case law. So again, this what I understand is this case law is pertaining to prior to 2012, that is positive era, right?
Yeah.
So at that point of time, again, specific services were
Specific categories of
defined.
services were there. Yeah.
So
I agree.
for any show cause to be issued, it has to categorize as to which particular category of service is there. Only then that show cause was valid show cause. Otherwise, it was null and void. Coming to the negative era, so in negative era, they were issuing show causes by giving us the definition of the services. Once it qualifies into that definition of services, then probably they were not giving as to whether it was a business auxiliary services, business promotion services, and all that. So my question is coming to the GST era. As you mentioned that the service category should be identified, whether they should service or goods, whatever. So whether they should give the HSN or SET as such in the show cause notice, or just the classification that this is this particular service and that would suffice, or what is your view on that?
My view would be that they need not give a classification, but at least they need to say what is the supply that has been made. Like it is a supply of goods or a supply of service, or it is an intrastate supply or an interstate supply. At least these basic requirements they are supposed to point out in the show cause notice. Merely because there is a difference in the income, what has been reflected, they cannot raise a demand. They did not specify the HSN classification or like that, but at least what some evidence, the effort has to be there from their side also, department side, before stating a demand, what is the nature of supply, whether it is supply of goods, supply of service, the place of supply is also relevant, time of supply is also relevant. So unless all those factors are considered, just merely by raising a different demand on difference is not permissible. But they did not classify HS and Ys and all those things. Where this is a particular for a service falling under this category, that they did not do that. That is what my view is.
Okay.
Okay. So with this, I am thankful for all the participants to have a patient hearing and participating well in this discussion with me. I also thank WIC and Jinit and Vikram Bhai sir to giving me this opportunity, because I also came to know about these case laws recently. So I'm very thankful for them. It's also helping me in some of my other cases. So with this, I stop my session over here. Over to you, Jinit sir. You can carry on.
Vikram, will you take over?
Yeah, thank you, Srikant. It was a wonderful session, and a very well-deserved vote of thanks will be given by Ronak. Ronak?
Yeah, thank you, Vikram bhai. In fact, it was a great session, Srikant bhai, and I would like to express a sincere vote of thanks to you for taking the time out today, and for the virtual study group of indirect taxes, which has been organized by WRC. So thank you to WRC and Vikram bhai and Janet bhai also to taking their time out and kind of coordinating this out. Also for a patient audience, and also they were participating very nicely. I would also like to highlight that you have kind of given an in-depth analysis and also nexus of how these case laws in the erstwhile regime touch base upon the GST regime. And it has been an excellent coverage of so many various issues, starting all the way from limitation principle, refund of cesses, tolerating an act, recovery of liquidated damages, payment of salaries to employees of the parent of foreign company, and the other charges recovered by the builder, and so on and so forth. So it was a wonderful session, and we definitely gained a good amount of knowledge and got updated with these case laws. So thank you. With this, I would hand it over to Janet Bhai.
So Dinesh bhai, can we be? I'm sure we'll be sharing the presentation on the and the recording also, right?
Amit sir, we have already shared the presentation on the WhatsApp group.
Okay, I'll check it up. Sorry, I must have
So
missed
if
it.
you don't
Sorry.
have it, do let me know on personal chat. I will share it with you personally. Not an issue.
Thank you very much.
Thank you, Srikant. Thank you.
Well, thanks a lot, everyone.
Thanks a lot. Thanks.
Thank you, everybody. Thank you.
Yeah.